Do you think the interest rates might be increasing a little bit? I don't know. I think so. They had due time to be going up at some point in time. And what is that effect going to have? There are some who are calling for a substantial drop in home prices should mortgage interest rates begin to rise rapidly. At a glance, that makes sense if the cost of home is determined by the price or home and the price of financing that home. If mortgage interest rates increase, less people will be able to buy, and the logic says prices will fall if demand decreases. However, history shows us that this has not been the case. In the last 4 times, mortgage interest rates have dramatically increased. If we take a look back at May 1983, mortgage interest rates averaged was 12.63%. I know, it's just ridiculous. I think we're just getting in this unrealistic perception that rates are just going to stay like crazy low, and they're not. Could you imagine buying a home and trying to get a mortgage at a 12.63% interest rate? Well, then in July of 1984, they actually went up to 14.67%, over a 2% increase. But real estate value change during that same time frame was up 6.6%. So there's example 1. Now, if we go into March of 1987, mortgage interest rates averaged for that month at 9.04. And in October 1987, they increased to 11.26. Again, over a 2% increase. But again, real estate value change during that same time frame went up 5.2%. And then let's go to October 1993. Mortgage interest rates averaged 6.83. And in December 1994, 9.2%. Once again, over 2% increase in rate. And once again, the value change during that time frame was a little bit lower, 1.2%. But in those incidents where interest rates increased more than 2%, the market didn't decrease or drop at all. So we'll just have to wait and see what happens in moving forward. But as prices fall, rates, not a guarantee that we're gonna see prices fall when the interest rates do go up. Now, when mortgage interest rates increase, what we can guarantee is the buying potential and what's going to happen there. So I want to talk a little bit about that. Let's look at the history of interest rates. Back in 70s, the interest rates averaged around 8.86%. So on a $300,000 loan, that would be a principal and interest payment of $23.85 a month. And then in the 80s, 12.7%, principal and interest on the same loan amount, $32.50 a month. In the 90s, 8.12%, principal and interest on a $300,000 loan, $22.25. And then in 2000, the average interest rates in 2000s were 6.29%, principal and interest $18.55. Now, if we go to our year-to-date right now, average interest rates on a 30-year fixed rate have been 4.33%. In year-to-date for 2014. That's $14.90 for your principal and interest. So even in today's mortgage interest rates, if we go back to 2000 average of 6.29%, this would be $365 a month higher. More importantly, or even as important, is the loss in buying power, because that's really what you're looking for. Is when you're looking at your mortgage payment, it's how it's going to affect your buying power when you're out there in the real estate market purchasing a home. It's going to be anywhere from $60,000 to $80,000 you dropped in buying power, depending on where your down payment is. Again, that's for a $365 a month increase in payment because of the interest rates. So let's talk to any of you, if you're first-time home buyers out and listening to the show today. What if you can't afford to purchase anymore? You just lost $60,000 to $80,000, and we're only talking about a 2% increase in interest rates. Is that going to get you out of the market? Look at the homes now and think, if you were forced to purchase $60,000 or $80,000 more, could you actually afford to purchase that home, or would you have missed an opportunity? And the risk, as I've mentioned before, for renters out there is you don't know what's going to happen with your rent payment. You don't know how often it's going to increase. You don't know how quickly it's going to increase, how many times it's going to increase. And so just the risk of losing out the opportunity of getting into home ownership, which I've talked about before, is a fixed rate for 30 years if you choose a fixed rate loan. And at some point in time, you're actually going to pay that off, whereas rent you're going to continue to pay forever. Now, a move-up buyer, you might have a missed opportunity as well, being able to get into a more desirable neighborhood, a better school zone for your children, a better area for your family. Cost is always more important than price. So even if the market did drop in price, with interest rates increasing, the cost would be higher and you'd come out short. Just take a look at a $500,000 loan amount. Interest rate, just using hypothetical example purposes only, 4%. The cost would be for principal and interest, $23.90 a month. So even if the price did drop, and let's say 10%, I don't know, I'm not a real estate expert, but I don't think that we're going to see the market drop 10%. Unlikely would be my guess. But let's just say that it did. That $500,000 home would go down to $450,000. So just using the same amount for the loan amount, interest rates only increase 1% to 5%. The cost for the principal and interest is $24.15. So it's only an additional $20 a month. You only lost buying power, $5 to $10,000, no big deal. But the market dropped 10%. And in that example, your payment still went up a little bit. What if the rates went up to 6%? The cost would be $2,700, $300 loss, $50,000 to $70,000 in buying power. I know it's a lot of numbers, but you can go back to themoneyhour.com. You can listen to the segment over and over, write down the numbers, because no matter how you look at the numbers, the opportunity right now is an amazing opportunity, regardless of what the real estate market is going to do. And again, I have some experts in studio that are going to talk on this topic, but it's because of the cost to purchase right now. And I think that we can all agree, eventually at some point in time, these interest rates have to increase. You don't want to miss the opportunity. So just a little bit of encouragement for all of you that are out there thinking of purchasing a home, and you might be sitting on the fence just not knowing what to do. You're not sure what the real estate market might do. Maybe that'll give you a little help to ensure you're not going to miss out on an opportunity. Coming up next on The Money Hour, what you need to know as a buyer considering to purchase real estate in our local real estate market here, Northwest Dream Team with John L. Scott Real Estate, right here on 1150 AM KKNW after the short break.